Welcome to the 6th episode of our monthly video series. In these videos we cover different topics each month, providing an overview of the issues faced by pension industry practitioners and offering some practical insight.
The time spent watching these videos can count towards solicitors' continuing competence and PMI CPD requirements. Please contact us if you require further information, and details will be provided at the end. All videos are available on our Mayor Brown YouTube channel. You can also subscribe to this channel so that new episodes are shown automatically in your subscriptions feed.
In this episode, since we've just had the general election and heard the Queen's speech, it seemed only right to talk to you about the impact Conservatives winning the election could have on pensions.
In summary, in their manifesto, which has been affirmed by the Queen's speech, the Conservatives made the following promises in respect of pensions. 1. To maintain the state pension triple lock. 2. To conduct a comprehensive review of the tax loophole that adversely affects those on net pay arrangements. 3. To conduct an urgent review of the tapered annual allowance issue affecting the NHS pension scheme. 4. To unlock long-term capital in pension schemes to invest in and commercialise UK's scientific discoveries. And finally, to reintroduce the Pension Schemes Bill. We're going to cover each of these briefly in turn and explain what it means. To start off, we will cover the triple lock.
To make sure state pension keeps pace with earnings, the triple lock was introduced. The triple lock is a mechanism which guarantees that there will be a minimum increase to state pensions each year. This minimum increase is the highest of 2.5%, inflation, or the average earnings growth, i.e. the triple lock. The intention is to keep this triple lock, meaning that the value of the state pension is expected to be maintained. Talking about the value of pensions, we will now tell you about the tax loophole which adversely affects those in net pay pension arrangements.
In essence, a net pay arrangement is one where a member's pension contributions are collected before income tax is paid, whereas in a relief at source pension arrangement, contributions are taken from pay after income tax. In a relief at source arrangement, every member, regardless of how much they earn, will receive 20% tax relief claimed by the pension provider from the government and added to their pot. Higher rate taxpayers need to claim back the additional tax relief themselves. By contrast, in a net pay arrangement, as contributions are deducted before income tax is paid, full tax relief is given on contributions straight away. However, if an employee does not pay tax, for example because they are earning below £12,500, they do not recover any tax relief. And currently, there is no established mechanism for them to claim this tax relief. This issue, which impacts some employees, is to be reviewed with a view to fixing it. And the Queen has confirmed in her speech the government is committed to introducing measures which help people save for later life. Next, we will cover the issue with the NHS and tapered annual allowance.
In summary, the tapered annual allowance gradually reduces the annual allowance, i.e. the amount of contributions that a person can pay to a pension scheme and benefit from tax relief, which is available to high earners. The standard annual allowance is currently £40,000. However, if a person has an adjusted income over £150,000, for every £2 above that 150, the annual allowance will reduce by £1. The reduced annual allowance a person can have will never go below £10,000. For doctors in the NHS pension scheme, the introduction of the tapered annual allowance has led to them actually having to pay higher amounts of tax to remain in the NHS pension scheme. As such, the British Medical Association has been campaigning to remove the annual allowance restriction for defined benefit schemes. The general thinking is that this tax rule has led to doctors cutting their hours, leaving the pension schemes or retiring early, which reduces the number of doctors available for the public. The impact of the annual allowance for NHS employees is to be reviewed within the Conservatives' first 30 days, and the Queen's speech has also highlighted the focus of the government on providing support to the NHS workforce. It will be interesting to see if this exercise will lead to a wider review of the annual allowance more generally.
We're coming towards the end of our time, and so I'll finish by telling you in a minute or two about unlocking long-term capital in pension schemes and the revival of the Pension Schemes Bill. The intention is to encourage pension schemes to increase long-term investment in scientific development, which are expected to generate significant returns and create a vibrant science-based economy. And finally, the Queen has confirmed in her speech that there will be an ambitious programme of domestic reform, which will likely include the reintroduction of the Pension Schemes Bill, The bill covers matters such as the framework for the new pensions dashboards, introducing a new style of pension scheme, the collective defined contribution scheme, and new pension regulator powers.
Before we end this episode, as this is Richard's last video, I just want to take the opportunity to thank Richard Goldstein for all his contributions to the videos, which I know have been appreciated by all of our viewers.
Thank you very much. This is the last video that I'll be doing in this series, but I'll leave you in the capable hands of Beth.
Please feel free to email me with any comments or questions on this video to bbrown@mayorbrown.com. This video is an overview of the law in this area, and how the law will apply in any particular case will depend on the individual circumstances. Please therefore remember to seek legal advice on your particular circumstances. Thank you for watching. Happy holidays!